Oh man, so another green day for Bitcoin. Are we starting to get some momentum? And is this bottom formation finally coming into fruition? We're going to look at a whole bunch of on-chain metrics which may indicate that finally we can start to tick off all the key criteria for official bear market completion. We're going to go through this, so don't miss any of this, guys. Smash up the like button. Don't forget to subscribe. We're also going to take a look at the Bitcoin charts, and make sure you check out the links in the description to BYBIT or BitGet, both affiliate links which support this channel. But if you want to trade any crypto, you can do so using those links in the description. As you can see, guys, a lovely breakout here from Bitcoin. Now, we were patient. We saw this breakout play out. We followed it exactly like the textbook, managing our risk throughout. And now you can see here, we have the breakout from this bear flag. The previous bear flags, we were unable to do that bear flag breakdown. And this time, finally, we are getting the breakout, which is really, really good news, because what it does is it sets us up for a relief rally, which I've explained in detail yesterday. But the question is this the bottom? After the relief rally, will we be able to build the scaffolding blocks to work our way to the upside, or will things come back down to these lows? That's what we're trying to figure out now. What we're going to do is we're going to look at a whole bunch of on-chain metrics, but first, let's take a look at Fear and Greed. You can see that sitting at 31. So the market is feeling confident, right? You're seeing the tourists come back in. You're seeing a bit of FOMO, people talking about Bitcoin, right? I always love to use that social indicator as well, just to add that on top of our analysis. People are feeling a little bit excited. So let's take a look at some of these on-chain metrics. And the first thing I want to remind you guys of, which is really important, is market bottoms form when two things happen. The first is something you may have heard of, which people just throw around willy-nilly: capitulation. And the second is redistribution. Now, capitulation happens when people are selling at realized losses. You've got people who are actively going out into the market and selling their Bitcoin at a loss. That is known as capitulation. They've given in to the market, they've given up hope, and they've sold their Bitcoin at a loss. The second is something called redistribution. Redistribution is when you see short-term holders sell their bags to long-term holders. And when that happens, when you see these short-term holders leaving the market and rotating across to long-term holders, that sets you up for a bigger move to the upside. Why? Because on average, long-term holders do not capitulate by definition as easy as short-term holders. So you start to stop that bleed, and that is when you start to cement the bottom. Say, okay, now the coins are in long-term holders' hands with high conviction. We should be able to start working our way to the upside. Okay, so that's what we're seeing start to play out. So the first thing I wanted to show you was this. And what this is, which you're looking at, is the Bitcoin days below realized price. Now, it's really important to see that we are indeed below our realized price. The realized price is the price at which you, in essence, the aggregate cost basis, the aggregate price that everybody has owning their Bitcoin. Now, what you can see is we're below that price, and we have been now for 35 days so far. Now, if we look to previous markets, we'll ignore COVID, which was 7 days we were in this period. Let's look to the 2018 bear, and you see you were in here for 134 days. The 2014-2015 bear, we were in this position for 300 days, and 2011-2012, which is going back too far, is 157 days. So what we can say is the characteristic has been met, right? If you had a checklist to say, has the bottom been met? One of the things on the checklist would be you're trading for a number of days below your realized price. That's been met, but has the time span been met? That's the question, because we've not been below it for long enough, right? 35 days. Now, obviously, somebody rationally could make the argument that Bitcoin is a superior asset class now. It's grown. There's more adoption. Therefore, there's less need to be there for 134 days or what we had here, which was 300 days. Maybe there's less need for this. But the argument is still there to be had that maybe 35 days is not quite enough, right? Maybe this 35 days is not quite enough there. So that's something we'll have to keep an eye on to say, okay, are we just suddenly going to rotate back again? Or could we be here for another 30 days or 45 days or 50 days, bringing that total closer maybe to 100 days, at which point we say, okay, we've been in here for a fair amount of time now below our realized price. Now already we can see the price has shot up over the last few days, and now we're starting to climb back above our realized price. But the question is, are we going to notch back down? So that's the first thing we want to look at, is the number of days below that realized price. Now, the next thing you want to look at is the market value versus realized value. Now, in essence, when this metric is less than 1, what that means is you are at a loss, okay? So the market value is less than the realized value, okay? So the current trading price of Bitcoin is less than the aggregate cost basis, the realization price. So what you can see, in other words, is every time in these previous bear markets, and you can see how this behaves, let's look at this example here, we've been in the red zone there, and that means you decline into capitulation, okay? People are underwater. Similarly here in 2015, a long period of time underwater. Now look here, we've just nudged under here, okay guys? So we can see that we've just nudged there, just there, in that bottom right hand corner. You should be able to see that just there. Okay, we've just nudged into the red, showing that people on average are underwater. But again, it extends. We can check it off the list that we are underwater, right? We are indeed meeting that criteria of the bear market. But the question is, are we going to be at this kind of length for as long as we have been in previous bears? Or is this going to be a rotation up now and that's it? That's what we need to ask ourselves. Now, the only other example we have is the one next to it, which is the COVID one, where we just wicked below and then we went on a massive tear. But you've got to remember, the macroeconomy was supportive, right? The monetary response was accommodative, interest rates were super low, stimulus checks everywhere. It was a very different environment there compared to what we're in now, which is the macroeconomic difficulty. This is really, really important. Okay, so let's keep things moving. And then what we can see here is these are a bunch of, I've shared this with you again a couple of weeks ago, but what this is a bunch of different pricing models, okay, which normally indicate the bottoms here for a Bitcoin bear market. Now, what I want to walk you through is there are a few important ones. So this gold line you're looking at here, the gold line at the top is known as realized price, and realized price is currently sitting at $22,092. Okay, now you can see we're trading below that. Now there are two other indicators which we need to look at. One is known as the delta price, which you can see there is sitting at 14,215. That is your realized price minus your average price. Again, your realized price being the price at which you realized your coins, right? So your aggregate cost basis, and then your average price. So that currently sits at 14,215. Now, why is that important? Well, that brown line there, historically, as you can see in previous bear markets, just here and just here, normally you touch that brown line. See where that green circle is? You touch that brown line just to finalize that bear market. And we've seen that happen here, and we also saw that happen, if I just pop me out of the way, you go over there, and you've seen that also happen here in the 2015 bear as well, okay? Just touching that brown line, and it was very quick, just a quick touch down to that delta price before then heading higher. So that's one price that, you know, has been there, but we've never shown that we're getting close to that 14,000 level. The balance price is another price floor, and you can see that one is sitting at 17,545. Now, the balance price is your realized price minus the transfer price. Best way to think about this is it's the difference between what was paid and where you're spending the coins at. So that's the difference there. Now, that is sitting at 17,545, which is no coincidence was our low. We did wick down and touch that level. But the question is, are we going to see that delta price model? Maybe not. Maybe we're going to invalidate this, and we won't need to on this bear market come down to tick off the fact that we need to hit 14,215. Now, I've continuously felt over the last couple of weeks that maybe we're going to have another visit down. Maybe we're going to rally up a little bit and then have another visit down. But I'm not going to sit here and hedge all my bets on the fact that we are definitely coming down to 14,215. Right? I'll keep some dry powder to the side that if we do, then great, but we cannot sit here and have strategies waiting to hit a certain price on crypto. And that is why I'm continuously deploying, I'm continuously nibbling. Even on, you know, I try to avoid the green days, but even if there's small green days, I would nibble, but I would not chase green candles. And I just consistently buy. I'll buy at 17,600, I'll buy at 19,000, I'll buy at 21, I'll buy at 22. Long term, it doesn't matter once Bitcoin gets back to the highs. So the biggest mistake you could be making is sitting out and doing nothing. You can expect another low, but you can't sit here at 21, 22, completely out of the market, and then you get to, Bitcoin runs up to 30 and then runs up to 40. You're like, I never got into the market, right? Really, really important that we understand that, and that, you know, this is a really, really important aspect of investing. Now, the next graphic I wanted to show you was the unrealized loss. So this is people who are sitting on coins which have drastically reduced in value, of course, and now they're sitting on an unrealized loss, but they haven't gone ahead and sold it yet. So they haven't realized that loss yet, but they're sitting there. Their portfolios are really, really badly red. And this is a really interesting piece of analysis I've seen. And what you can notice is this. When we run up to 64,000 in the summer of 2021, just before the summer, sorry, of 2021, around March, April time, and then we fell in the summer down to 29,000 on Bitcoin. Those of you who are here will remember this big fall down to here. Now, at that point, we're asking ourselves, what is going on? And you can see the realized value. These are the realized value losses, right? 55 billion to about 90 billion was where these kind of spiked. Now, look at the difference between here. Then what we had happen was the price ran up to 69,000 in November and has subsequently crashed down to where we've seen it crash down. Look at the spike of this unrealized losses. Now, why is this happening? We need to understand, why are these spikes so much bigger than these spikes here? And the reason for that is what happened after this run-up. After this run-up here to 64, then we fell back to 29. When we ran up the second time in 2021 up to 69, the long-term holders were very, very smart. They sold to the tourists. That's what they did. They sold to short-term holders who are now in huge, huge losses right now, okay? And now when the price falls down to 17,600, guess what happens? The short-term holders capitulate. They capitulate, they sell at now not an unrealized, but a realized loss, and guess who picks up? The long-term holders. The ones who sold it to them here will now pick up at 17,000, 18,000, 19,000, 20,000, and they're ready to run to the upside once their bags are loaded. So that is the capitulation plus the redistribution. We're seeing it happen in real time, which is a good sign that this market is bottoming. But the only caveat we've got where we've not got the data for is how long does this need to happen for? Are we ready to go to the upside? Is this just a relief rally? That's what we need to understand right now. Now, the other thing I wanted to share with you here was your relative unrealized loss. Okay, so what this is showing you is the ratio of your unrealized loss compared to the market cap, because you're looking at the skyscraper of the orange I just showed you in the previous graph. You're like, yeah, but the Bitcoin market's getting bigger. I understand that. So let's take a look at the percentages. And when you take a look at the percentages, the current unrealized loss is 55%. You can see that just below my head is 55% of market cap, okay? Now, previously, in previous bear markets, this was as high as 78%. In other words, 78% of all the market cap was held in unrealized losses. And in 2015 bear, it was 114%, right? So it exceeded the revalued market cap, which is insane. So you can again make the argument that maybe this needs to go a little bit deeper, right? We've not quite got to percentages of where we've been to in previous bull runs, but definitely we can check that off again, that a very high percentage of the market cap is in unrealized losses. We're now higher than the peak we saw in COVID, which again is another indicator that this bear market formation, this bottom pattern, is officially forming. And last but not least, I want to share with you this, which is the total supply in loss. So you can see here in dating back to when we fell all the way down to 17,600, 9.219 million Bitcoins were in loss. Let me just pop me out the way. Sorry about that. 9.219 million Bitcoins were in loss. But then when the price was at 21.2K, so when it climbed back up, you saw that fall down to 7.6 million Bitcoins in loss. Okay, so you're seeing that a lot of the supply is in loss right now, which is again another indicator of this bottoming pattern form. So what are we trying to say here? Well, what we're trying to say here, this is a nice run. This is a nice textbook pattern, and congratulations if you bought this and you're trading this move. My long is still open. I'll be taking it up towards the price target here of 25,000 and then reevaluating there. Those of you guys who want to trade any spot Bitcoin, or if you want to trade short-term Bitcoin, you can do so using BYBIT or BitGet, links in description. But the question now is, once we get through 25 and we start running towards 30, we're going to hit a bunch of resistance. And the question now is, are we going to get above this 30,000 level? And don't forget, the key level I want to share with you before that is this. If we get this daily close right now above this line here, I don't know if you guys can see, let's just try to zoom in there, that top faint red line, if we can get the close above there, I'm going to give you the number for that. It's sitting at about just shy of 24,000. If we can get a close at comfortably 24,000, this would be a flip of our EMA ribbon bullish. This would be huge, guys. That would be a flip of our EMA ribbon bullish, and that could indicate to us that finally we are ready to start moving towards 30,000. That could be huge. But even then, we have to respect, even at those levels, we have to now understand that the bears continue to be in control until we prove that on a slightly longer term basis. I'm going to bring out the weekly chart just to remind you guys of where we're at, because a lot of people can forget. I'm just going to show you it on a cleaner chart so you don't have all my scribbles on all of them. But here we go. We take this one just to remind you of where we're at. 30,000 takes you to here. So we can enjoy this. We can have this run up to 25. Flip our daily EMA bullish. That's good news. It'll be great for our trade. But for our long-term positions, you want to see that I would not be FOMOing in at 30. Right? That's my point. I'll be nibbling now for my long-term holds, but I would not be FOMOing at the 30, because when this starts running towards 30, which it will do quite quickly if it feels like it, we're running into our weekly EMA resistance. And the question then is, what's going to happen? Are we going to get thrown to the downside, or can we progress towards 40? And it's at that point, all the tourists are going to come into the market, all the influencers will be talking about Bitcoin going to the moon. It becomes very, very difficult. And this is why you need to leave your emotions to the side. You need to dollar cost average, you need to hold, and you need to just have long-term conviction. It's a very tricky time out there in the market right now, because you're in this kind of no man's land where we're in the midst of a relief rally, which could take us quite quickly up through 25 and then towards 30. And you want to take advantage of that if in terms of a short-term trade. But long-term portfolio, you just want to ignore that noise and just, if you see value in Bitcoin, buy Bitcoin. If you see value every week, whenever you're purchasing, see value, make a decision. 21, I like it. 22, I like it. 24, long-term, if we're up at 100K on Bitcoin, I still like it. I'm going to nibble some. And that's the best way to build wealth. And that way, you're not going to sit out of the market and let this whole run happen because you're waiting for one on-chain metric which hasn't been ticked off to tick off, right? All of these pricing models are just exactly that. They're all models and they're all good until they fail. So we use them to aid our decisions. We let the data lead us. But at the same time, we can't just sit there out of the market saying, I've not deployed any capital because I'm waiting for Bitcoin to hit 10,000, which somebody made up on some YouTube video. Doesn't work like that. So that's why it's really important. That's why I'm, heavily into the market already. I'm still dollar cost averaging. I'm still buying more. I've got my short-term trades open as well. And I'm really looking forward to a potential move to the upside. But I'm still aware we're doing that against the trend. Hope you guys are following. This content can get quite complicated times. So I appreciate you guys watching this through to the very end. Don't forget to smash up the like button and subscribe. If you appreciate this type of content, let me know in the comments. Go watch this video here, and I'll see you in the next one.